Hey everyone, welcome back to DollarZen Insights. This is where you get the clear, no-nonsense financial intel you need. Before we jump in, if you want to stay sharp on what's happening in the economy, do me a quick favor, hit that like button, subscribe, and make sure you ring that notification bell so you don't miss a thing. All right, let's get into it. We need to talk about the U.S. economy in 2025 because, folks, it's not one economy anymore. We're seeing this massive split. For some people, things have never been better, but for millions of others, it feels like the ground is just crumbling beneath their feet. So, what's the deal? Is the economy booming or is it busting? I mean, how can you have stocks hitting all-time highs while at the same time, families are struggling just to buy groceries? It's the biggest economic puzzle of our time, and figuring out the answer is absolutely critical for your money and your future. Well, the crazy thing is, the answer is both. It's a boom and a bust, happening at the exact same time. We're living in two totally different economic realities, and there's a specific name for this split. So let's break down what's going on. Here's how we're going to tackle this. First, we're going to define what this K-shape actually is. Then, we'll look at real-world examples you can see every day. After that, we'll dig into the hard data that shows why this gap is getting wider. And most importantly, we'll wrap up with some real strategies you can use to navigate your financial path, no matter which side you're on. All right, first things first. You hear this term K-shaped economy thrown around a lot. What does it actually mean? It's not just some fancy buzzword, it's probably the single best way to visualize what's happening with wealth in America right now. So think about it like this. After a recession, you usually hope for a V-shaped recovery, right? Everybody goes down, then everybody comes back up. But that's not what's happening. Instead, picture the letter K. After the initial drop, one part of the economy, the top arm of the K, shoots straight up, fortunes are made, wealth is growing, but at the same time, the other part, the bottom arm of the K, starts trending down, falling further and further behind. So who exactly is on these two paths? Well, that top arm, that's the top 20% of earners. They're seeing their incomes go up, and more importantly, their investment portfolios are booming. But the bottom arm, that's the majority of the country. For the bottom 60%, paychecks are basically stuck in neutral, while the cost of everything, from rent to food to gas, has jumped 30 to 40%. That's a brutal, brutal combination. And this chart just shows the sheer scale of the split. Since 2020, the net worth of the top 10% has exploded by 68%. Now you look at the bottom 50% and you see a 12% gain, and you might think, hey, that's not so bad. But here's the catch, and it's a big one. Almost all of that gain for the bottom half isn't cash. It's tied up in the value of their homes. And look, that's great on paper, but you can't pay your bills with home equity. You can't buy groceries with it. It's not spendable money. Okay, so we've defined the concept, but what does this K-shape actually look like out in the real world? This isn't just some theory in a textbook. You can literally see it every single day in the choices people are making with their money. This table lays it out perfectly. Take a look at retail. Sales at luxury stores are up as much as 25%. At the exact same time, discount stores are setting sales records because so many families are forced to trade down. Then you've got restaurants. High-end dining revenue is up 22%. But your local casual family spot, their revenue is down 9%. And travel, wow, private jet bookings have soared 40%, while budget cruise lines are seeing cancellations up 60%. It's two different countries living side by side. And the housing market is maybe the clearest example of all. The market for homes over $1 million is on fire, all-time high sales. But the market for homes under $300,000, the traditional starter homes, sales have completely collapsed to their lowest point in 15 years. The first rung on the ladder of the American dream is being pulled away. Now, let's get into the hard numbers that show the incredible strain on that bottom arm of the K. These are just anecdotes. This is the raw data that proves this divide isn't just real, it's actually getting wider. And don't expect this to just fix itself. The big banks, we're talking Bank of America, Goldman Sachs, JP Morgan, they all predict this K-shape is going to last until at least 2028. And it's being driven by some powerful forces. You've got AI and automation wiping out stable middle-class jobs. You've got the cost of essentials, healthcare, housing, education, climbing by a painful 8 to 12% every single year. And on top of it all, tax policies are still set up to benefit the very top, helping their wealth grow even faster. The pressure is starting to cause cracks everywhere. In 2025 alone, 655 major corporations filed for bankruptcy protection. Let that sink in. That is the highest number we have seen since the absolute depths of the 2009 financial crisis. And it's not just big companies. It's hitting regular households just as hard. The number of people who are more than 90 days late on their credit card bills has shot up to the highest level since 2011. That's a massive red flag that people are drowning in debt and just can't keep up. And this is why. A shocking 62% of Americans don't even have $500 saved for an emergency. Think about that. One unexpected car repair, one medical bill, and millions of families are thrown into a full-blown crisis. People are living right on the financial edge. And maybe the most heartbreaking number of all, demand at food banks is up 40% in just 2 years. We're not talking about stock portfolios here. We're talking about whether people can feed their families. And just to show you the two extremes, in the very same year, we saw a record number of billionaire spouse wealth transfers, averaging $2.4 billion. The contrast is just stunning. Okay, I know that's a lot, and those numbers are pretty grim, but we are not here to just point out the problem. We're here to find solutions. So let's pivot and talk about what you can actually do right now to protect yourself and get ahead in this divided economy. So your game plan has to be tailored to where you are on the K. If you're on that lower arm, you have to play defense. That means, number 1, building up a 6-month emergency fund like your life depends on it. Number 2, get aggressive with high-interest debt. Look at 0% balance transfer cards to give yourself breathing room. And number 3, start learning AI-proof skills in fields like the trades, healthcare, or energy. Now, if you're on the upper arm, your strategy can be more offensive. You might look at investing in dividend stocks of companies that serve the lower arm. Think Walmart or Dollar General. You could also consider multifamily real estate to generate steady rental income. And finally, it's smart to hedge against inflation by keeping 5 to 10% of your portfolio in assets like gold or Bitcoin. So here's the bottom line. This is not a passing fad. This is the new reality. Understanding which arm of the K you are on and taking action based on that reality will probably be the single most important factor for your financial life over the next 5 to 10 years. So, the challenge for every single one of us is to be honest about where we stand and then to make the smart moves to build a secure future. The K-shape is here. The question you have to ask yourself is, which arm is going to define your next decade? I'd really love to hear from you on this one. Drop a comment below and let me know if you feel like you're on the upper or lower arm. If you got value out of this explainer, please hit that like button, subscribe for more just like it, and don't forget to ring that bell. Up next, we're releasing 7 stocks quietly benefiting from the K-shape, and you definitely won't want to miss that. Just a reminder, this video is for educational purposes only and is not financial advice. Please consult with a licensed financial professional before making any financial decisions.